We are on Chapter 8. Chapter 8 deals with the very last step of our end of fiscal year work. Okay, so this is the very end of our first unit. What we have done so far in Chapter 8 is we've gone through and we have journalized our adjusting entries. That was pretty easy when I covered that on Monday. Basically, all we had to do is we looked at a worksheet, and the worksheet is something we would have already completed and would have already done. And we looked at our adjustment column, and we really journalized in our journal A and B. We need to remember that we do our debits first, and then our credits. We did that for A, and then we did it for B. And after we're done journalizing, we did something earth-shattering, and we posted. I know. That was our first section, 8-1, going through and journalizing our adjusting entries. Section 8-2, which was yesterday, was a smidge harder. There was some new stuff to it. We were journalizing, and when we journalize, we still use the same procedure where we got to make sure we have our debits first and then our credits. But what we did yesterday is we learned about our closing entries, and my reminder to you about closing entries is to read, okay? But not the normal spelling of read. It's R-E-I-D. Okay, so when you think of closing entries, the point of closing entries is to get to our accounts to zero. And what accounts do we want to close? Read. Okay, R stands for revenue. So the whole point of our closing entries is we need to get revenue to zero. Revenue has our revenue account is sales. Sales has a credit balance. So what do we do to close sales? Debit it, right? Okay, so if I debit sales, I have to have a credit. What do I close revenue into? Income summary, right? Okay, so sales will be debited, income summary would be credited. Now, that is my first closing entry. Do my closing entries have a source document? They do not. I don't have a check number. I don't have a memorandum. I don't have a receipt. And because of that, before I start filling in my closing entries, I put a heading on the top of that section that says closing entries, so therefore I don't have to worry about it. Every one of my closing entries and every one of my adjusting entries needs to start with a date, my debits and credits. So for my closing entries, I am going to have 4 dates because I have R-E-I-D, okay, 4 entries. So I close my revenue into my income summary. Then I have to do my E for read. And the E for read stands for? Let's try it again. Or E stands for? Everyone else, again, E stands for? Expenses. No sleeping. Expenses, thank you. Okay, expenses have what for normal balance? Debit. So what do we have to do to close it? Credit. So here's the thing. We can't put our expenses first, because we always have to do what? Debits first. So what account would we debit for our E? Income summary, okay? Income summary is a temporary account that we are using to close things into. So I'm going to debit income summary, but I don't know the amount yet because I have to list all of my expenses. I add them up, and then the total of all those expenses is what I debit to income summary. And now this is what you earned 3 Smarties for yesterday? Yes. Remember, your income summary account equals the amount of your net income or net loss, because what have we closed into it? Revenue and expenses. The difference between revenue and expenses is your net income or net loss. And you already know what your net income or net loss is because of your worksheet and your financial statements. So our third closing entry is the I in read, and I stands for everyone? Income summary. So we are closing our income summary account. And the balance of income summary is your net income or net loss. Who gets the money? The owner. So we are closing income summary into your capital account. Never, ever, ever close capital. The D stands for drawing. Drawing gets closed into capital. The I part of our read tends to be the hardest one, because if it's a net income, your capital account gets credited. If it's a net loss, your capital account will get debited, because it depends whether or not you're making money or losing money. So I can't say for your third one that you always put income summary first and draw and capital second. You have to look at what is physically happening to your business. So we then went through and journalized using read, and then we posted. But here's the thing. Just like after we journalized all of our transactions, how do we know if we posted everything correctly? Do we? Could we have made a mathematical mistake in posting? Okay. We proved after our regular journalizing that we did things correctly by going through and doing the first part of our worksheet, which is called a trial balance. The purpose of a trial balance is to prove that debits and credits equal after posting. So the very, very, very last thing that we do in an end of the fiscal period work is to prepare something called a post-closing trial balance. Post-closing meaning after closing entries, we're doing a trial balance. And then what we do for our post-closing trial balance is we take a look at every single account that we have. If that account has a balance, it goes on my post-closing trial balance. If it doesn't have a balance, I don't need to include it. So, for example, if I have accounts receivable Carson Moore, and it has a zero balance on it, he is still my customer. It's not closed out, but I just don't need to include it on there. So our post-closing trial balance has 3 lines on the top. The 3 lines on the top are always going to be the name of our business, the name of the document, and then the date. The date for our post-closing trial balance is we are not saying for our entire fiscal period that this was the balance of our accounts. We're saying on this one day, this is what my accounts equal to. Okay? So when we think about the date on the post-closing trial balance, it always has to be the last day of the fiscal period. And then, again, the whole purpose is at the very end, we should have our debits and credits equal. So that's the form that I've had up here is our post-closing trial balance. Not very long, is it? No, let's rock it. So what we have to look at is going to be, in our instructions, they're going to give you all of your ledger accounts. And is it important that they're listed in the correct order? Yes. What order do they get listed in? Dun, dun, dun. What order do we list them in? Assets are listed in an order of liquidity, so that's very good. Okay? So I should have them in account number order. So I need to go 110, 120, 130, 140. Why do I say that? Because if I go down the first column and then go to the second column, they will not be in the right order. Does that make sense? I need to go 110, 120, 130, 140 and list them in that order. The name of our business is Darlene's Delivery Service. Bless you. The name of this document is the post-closing trial balance, and the date is going to be July 31st of the current year. So the first account that I have is going to be cash, and cash has a balance of $7,350. Bless you. Then I have accounts receivable, Rommel, Woods, debited $372. Accounts receivable Wyatt for $88. Supplies $250. Prepaid insurance $900. Accounts payable Now, after I take a look at Darlene Wong Capital, when I look at all of the rest of my accounts, you will notice what is in the balance. Zeros, right? But they didn't do zeros. Basically, there are dashes through here to indicate that the account is closed and there's no balance. So any ones of the dashes don't need to be included. And those, again, are all of our temporary accounts. Our temporary accounts are going to be our revenue and expense accounts and our contra owner's equity accounts. So after I have all my accounts here on the very bottom, I'm going to write totals. And then I have to do my math and go through and add up my debits and credits. So you can take out your handy-dandy little calculator. Anyone have a debit number for me? 8,960. Tyson, do you have a credit number for me? Really? That number sounds familiar, Tyson. Why does it sound familiar? So have we achieved our goal on our post-closing trial balance? Yay! Debits and credits equal! Again, that's the whole thing. If you get to this point and your debits and credits don't equal, this is how you would fix it. You would go back and look at all of your posting from your adjusting and closing entries and double check that you didn't do math incorrectly. Or maybe you missed an account. But again, your end goal on your post-closing trial balance is to make sure that these two numbers equal. And if they did, rock solid, you have finished all of your work for the end of the fiscal period, and your business is now ready to begin their next fiscal period of journalizing transactions and determining if they are making a profit, which again is what all accountants do. All right, get it?